Welcome back to the Deep Dive. Today, we're taking on a big topic in enterprise tech,
That's right. We're looking at iPaaS.
integration platform as a service. If you're in the business world, you know this stuff is crucial. It's like the digital glue holding everything together, right? Connected apps, data, cloud services.
Couldn't have said it better. And the scale we're seeing. If anyone doubted just how big digital transformation has become, well, the research we've looked at, it really lays it out. We're talking explosive growth forecasted all the way to 2033.
Okay, explosive growth. Give us the headline number, the big shocker.
All right, so back in 2021, the global market revenue was about $4.5 billion. $4,562 million to be precise.
Okay, under $5 billion, a solid starting point, I guess.
Now, hold on. By 2033, that number is projected to soar past $702 billion.
72 billion, wow.
Yeah. It's almost a 16-fold jump in, just over a decade. That works out to a compound annual growth rate, a sheet of nearly 26%, 25.9% actually.
Almost 26% growth year after year. That's just staggering. This isn't some niche market growing. This sounds like core infrastructure hitting hyperdrive. But let's just pause for a sec. What's really driving this need for integration platforms on such a massive scale? Can't just be the buzzword digital transformation, can it?
No, you're right. And that's where we start the deep dive. It really boils down to, I'd say, three key tech realities facing pretty much every company out there. First, APIs.
Yeah.
Just the sheer explosion of them.
Right. Everything has an API now.
Everything. And managing that sprawl is a huge task. Second, you've got the rise of microservices.
Yeah.
Your own internal systems are now maybe dozens, even hundreds of tiny little services that all need to communicate flawlessly.
Sounds like chaos, honestly. So iPaaS is the air traffic controller for all this.
Exactly. For these hybrid IT environments, yes. And the third piece is that hybrid and multi-cloud reality. Companies aren't just on AWS or Azure anymore.
They're everywhere. AWS, Azure, Google Cloud, plus their own data centers.
Precisely. So you need something like an iPaaS to provide that single interface, that common language, to manage data flowing between all those zones without writing tons of custom code every time. That underlying necessity is what's fueling that near 26% global CAGR.
Okay, that makes sense. So let's unpack this $702 billion future. Where's the money concentrated now, and where's the real speed coming from? Let's start with the established players, North America and Europe. What's the picture there?
Right. These two regions are really the bedrock. They provide the scale, the big initial investments, the maturity. North America specifically is set to stay in the lead in terms of overall market size.
Okay.
By 2033, the forecast puts it over $25.5 billion in revenue, still growing really strong too, a CAGR of about 25.2%.
And I assume the U.S. is the lion's share of that $25.5 billion.
It is, yeah. The U.S. market alone is expected to break $21 billion by 2033. That's growing at a steady 25.2%. But here's a little detail that's quite interesting, something you might miss in the big reports. Canada.
Yeah.
Much smaller market overall, right? But its projected CAGR is actually slightly higher than the U.S. at 26.1%.
Huh. 26.1%. Why does that matter? I mean, it's less total money, but faster growth.
Right.
What's behind that?
Well, if you think about it, it could suggest a few things. Maybe Canadian businesses, perhaps because it's a smaller market, can make decisions a bit faster, more centrally. Or maybe stronger recent government pushes for cloud adoption. Whatever it is, it suggests they might be rolling out these integrated platforms just a tad more aggressively than their neighbors down south.
Interesting. So North America brings the weight, but maybe Canada brings a bit more velocity percentage-wise.
Exactly. A little hint of faster dynamism, maybe.
Okay, fascinating nuance. Let's hop across the Atlantic. Europe. Also projected to be huge, right? Almost $21 billion by 2033. And their regional CAGR is just a fraction higher than North America's at 25.5%.
That's right. A very strong region overall.
So which countries are really pushing that forward in Europe?
Germany really stands out. No huge surprise there, given its position as Europe's economic engine. Germany's projected to lead the continent in revenue set to hit over $4.1 billion by 2033. And crucially, it also boasts the highest regional KGR at 26.3%.
Wow, 26.3% in a mature economy like Germany. That's quite something.
It really is. It tells you this isn't just about basic digitalization anymore. That kind of sustained acceleration, well above the average for Europe, points pretty directly to big initiatives like Industry 4.0 really taking hold.
The manufacturing connection.
Yes, think about their manufacturing and engineering sectors. They need sophisticated real-time integration connecting factory floor systems, supply chains, ERPs. iPaaS is absolutely essential for that kind of efficiency.
Makes sense. And we also see other big players like the UK and France providing significant scale too, both projected well into the billions.
Definitely. The UK around $2.9 billion, France near $2.6 billion by 2033. Strong foundational markets.
Are there any contrasts within Europe? Any areas where integration seems to be moving a bit slower?
Well, if you look at the projections for Russia, for instance, its CAGR is around 23.7%. That's noticeably lower than Germany or the UK or France.
Okay, why might that be?
It often comes back to things like geopolitical factors, different regulatory environments. These can make large-scale, cross-border cloud deployments, especially using SaaS, a bit more complex or less standardized compared to Western Europe. But overall, the rest of Europe, particularly nations strong in industry and finance, is moving very fast.
Right. So we've got the established markets, North America, Europe setting the scale, huge numbers. But now, here's where it gets really interesting, I think. Where's the fastest growth, the highest velocity?
Yeah.
Let's pivot to Asia Pacific.
Yes, this is absolutely the acceleration engine, bar none. Asia Pacific is the fastest growing region for iPaaS globally. It's got the highest regional CAGR, hitting 27.2%.
27.2%.
And that translates into a forecast of nearly $17.7 billion in revenue by 2033, a massive surge.
That kind of speed suggests, well, two things probably. Huge markets playing catch-up, maybe, and also some really efficient new adopters jumping straight in. Who are the powerhouses driving this incredible pace?
China definitely leads in terms of sheer size. It's projected to reach over $55 billion by 2033, growing at a very powerful 27.4% CAGR.
Okay, $5 billion for China.
But if you're talking pure speed, you have to look at India. India's growth rate is just exceptional. It's advancing at a staggering 28.3% CAGR.
28.3%. That's one of the highest rates globally, isn't it?
It is absolutely phenomenal growth, projected to reach $2.2 billion.
What's going on in India specifically to create that kind of hyper-adoption?
I think it's a classic combination, really. You've got that greenfield opportunity, fewer old legacy systems to deal with compared to, say, the US or Germany.
Right, less baggage.
Exactly. So many Indian enterprises, and especially startups, are leaping straight to cloud-native architectures using microservices. They can build on iPaaS from the ground up, essentially skipping the integration headaches that older companies had to retrofit. That ability to leapfrog technology is a huge driver behind that 28% plus growth.
That's a great point. Integration not just as effects, but as a core design principle from the start.
Precisely.
And it's not just China and India, right?
Sure.
The data shows Japan is also a major player, over $2.8 billion projected. And then you have places like Singapore and Southeast Asia also showing KGRs well above 27%.
Yes, absolutely. Singapore at 27.6%, Southeast Asia collectively even higher at nearly 28%, and Japan itself is at 26.5%. What's really fascinating about APAC is that mix. You have mature, tech-heavy economies like Japan, rapidly emerging hubs like Singapore, and these huge, fast modernizing economies across Southeast Asia, all contributing to that incredibly high regional average. APAC is definitely the speed engine for global iPaaS.
Okay, so we've covered the scale North America and Europe. We've covered the speed Asia Pacific. Let's talk about what we could call the future frontiers. South America, the Middle East, Africa. Maybe smaller total numbers right now, but crucial for understanding where future global demand is heading.
For sure. And what's striking is that the growth trends are consistently strong across all these regions. Every single one has a regional KGR above that 25% global baseline we talked about, meaning they're all adopting integration tech faster than the overall average pace.
Okay, let's start with South America then.
South America is projected to hit over $4.2 billion by 2033. That's with a strong CAGR of 26.2%. Brazil is still the biggest market there, forecasted near $1.66 billion.
Right.
But keep an eye on Argentina. It actually shows the highest CAGR in the region, clocking in at 26.9%.
Argentina at almost 27% growth. Any thoughts on what's driving that specific velocity? Is it a particular industry?
It often happens in these smaller but high-growth economies. You might see a really strong fintech sector taking off, or maybe a big push to modernize a specific resource industry. That high rate in Argentina suggests rapid modernization is happening in certain high-value sectors, using iPaaS to connect systems quickly. Sometimes it's also a response to volatile local markets that demand businesses be really agile.
Makes sense. Okay, how about the Middle East? We always hear about huge infrastructure projects and digital transformation drives, especially in the Gulf states.
And the numbers reflect that. The Middle East is projected to reach nearly $3.4 billion by 2033, maintaining a very healthy 26.1% CAGR overall.
And within the region.
The UAE actually leads in terms of the growth rate with a 26.8% CAGR. That's slightly ahead of Turkey at 26.5%. Saudi Arabia remains the largest market by total revenue size, projected around $700 million by 2033.
That growth in the UAE, I guess that's heavily tied to things like global finance, logistics, maybe tourism, sectors that need deep, real-time connections.
Absolutely. Think about managing global supply chains passing through hubs there or handling massive volumes for tourism platforms. You need seamless data flow. That forces reliance on really robust iPaaS solutions. It's integration driven by international complexity.
Right. Okay, finally, Africa. What's the story the numbers tell us there?
Africa's market is forecasted to grow to over $2.66 billion by 2033, carrying a KGR of 25.4%. So, again, growing faster than the global average.
And within the continent.
South Africa stands out as the largest single market. It's projected to cross the $1 billion mark by 2033, with a strong CGR of 26.1%. Nigeria also shows very solid growth momentum, around 25.6%. This feels like growth driven by the spread of mobile infrastructure and the increasing formalization of business systems in key economic centers.
Okay, so we've gone around the globe, sliced and diced the numbers. Let's bring it back together. What does this deep dive really mean for you, our listener? Maybe you're running an IT team, maybe you're investing in this space.
Yeah.
What's the big takeaway?
I think if we synthesize all this data, the clearest takeaway is that iPaaS is rapidly becoming non-negotiable, fundamental infrastructure. Everywhere.
Not just a nice to have anymore.
Not at all. North America and Europe provide that huge, stable revenue base that proves the market is mature. But the real drivers of future growth, the places proving just how essential this tech is becoming, are Asia-Pacific, South America, and the Middle East. That's where the speed is coming from, often fueled by that greenfield vision and urgent needs to manage complexity.
So fast forward to 2033. The idea of running a significant enterprise, especially a global one, without a sophisticated integration platform is going to seem, well, pretty obsolete. It's not just another piece of software. It's becoming the basic architecture for doing business digitally.
Exactly. You can think of it as the essential plumbing that allows all the other innovation to happen on top.
Okay, as we wrap up, here's something for you to chew on, a final thought building on this data. We saw India leading global growth at that incredible 28.3%, and Germany leading Europe at 26.3%.
Right, both leaders, but in very different contexts.
Exactly. One dealing with, complex legacy manufacturing, the other with rapid greenfield expansion. So here's a question. If you had to pinpoint one specific policy lever, or maybe a major investment area, in both Delhi and Berlin, that helps explain why they are accelerating iPaaS adoption faster than their neighbors. What would it be?
Is it just about market size and economic structure, or is there a more deliberate national strategy pushing integrated digital infrastructure in those specific places?
Something to ponder. That connection between national economic priorities and this foundational tech investment.
Definitely something to think about.
We'll leave you with that thought. Catch you next time for the deep dive.